It's nearly end of financial year, and if you haven't already put thought into how to maximise your retirement income at the end of financial year, now's the time to start planning. So today we're talking to Andrew Lowe. He is the head of technical services at Challenger. And Andrew, you're going to help us try and save some money today, is that right?
That is absolutely the plan today, Wendy.
Okay, so first things first, as a retiree, who needs to lodge a tax return? So for example, if you're on an age pension, do you still need to lodge a tax return?
The answer is a little complicated, unfortunately, and it's fair to say that it's not an automatic exclusion. Simply because you get the age pension does not mean that you don't have to lodge a tax return. And in fact, many age pension recipients will, in fact, be required to lodge a tax return. As a general start of rule, where all of your income comes from the age pension and you don't have any tax withheld from any sources, you might not need to lodge an income tax return. But for many Australian retirees, they will have some income from other sources, and in particular, as we've seen interest rates ratchet up over the last couple of years, we're finding many Australians will be getting above thresholds that require them for perhaps the first time in a while to lodge an income tax return in those circumstances. So if I were to give you any guidance as to whether you're in or out, best source of truth for that is absolutely the ATO website. There is in fact a tool there. It's work out whether you need to lodge a tax return. Quick search will bring you to that page, and that will be the definitive guide as to your requirement as far as that's concerned. I'd say a few things, however. We've certainly seen, despite increases in interest rates, we still see many Australian retirees, because of the availability of things like low income tax offsets, senior Australians and pensioners tax offsets, not required to pay any tax. So while they might need to lodge a tax return, might need to pay any tax at the end of the day, might be eligible for a refund of any tax that's been withheld. And with the phase 3 tax cuts kicking in from the 1st of July this year, next year could be even better with that in mind. And in fact, appropriate structuring of retirement assets could mean that you could earn significant income from superannuation and then significant income from other sources as well, and still not be required to pay any tax in retirement. Final thing I'd add to that, just a reminder, if you've had any tax withheld, you are going to be lodging a tax return, and the upside of that is that that might come back to you with that in mind.
Well, I heard the words tax return, and I'm sure there's a lot of people out there who are hoping that they do indeed get one. But do you have any tips on what people need to declare? For example, do they need to declare interest on savings accounts, or what are your tips in that regard?
Yeah, won't come as any surprise to anyone listening today that the ATO is pretty interested in everything that Australians earn, including retirees, and that will absolutely include income from the age pension. It will absolutely include any income from employment, definitely interest from savings account and term deposits and those sorts of things. I'd highlight any investment earnings on other investments such as property or shares, including any realised capital gains. So beyond the idea of just income, there's this idea of capital there as well. And I'd finally add to that one-off source of income that perhaps sometimes gets missed is income from overseas. And so we see plenty of Australian retirees with some income from overseas for a lot of different reasons, required to advise the ATO of that in those circumstances. Superannuation is an interesting one as far as tax returns is concerned, because while it's generally true that super over 60 is tax-free, there might be some requirement to include certain amounts and different ages, and including over 60 in certain circumstances, income from superannuation payments in those circumstances. But a really important reminder, generally tax-free and might be tax effective in other circumstances as well. And so, final point, I'd look back and look at prior years and just highlight that you might have changes in your income from year to year, and interest rates at current multi-year highs might be one of the triggers for that. For example, you might have more income. You might not have been required to lodge tax returns in prior years. That income this year might necessitate that lodgement. Give consideration to all of those factors.
Sounds good. Sounds good. Now, you mentioned superannuation there. There's always a lot of conversation about super. how can retirees leverage it in this situation when we're talking end of financial year?
Yeah, fantastic. So for me, superannuation is a very, very attractive structure for retirement, both pre and post-retirement. In a post-retirement environment where I'm 60 years of age and I've converted my retirement savings into an income stream from super, I think it's almost the best tax structure that we have available. You know, a tax structure on which I pay no tax on income. I pay no tax on capital gains. I pay no tax on any income or lump sums that I withdraw. And in fact, the only time I think I need to be worried about tax is reasonably remote. It's post my death, where a benefit goes to a non-dependent in those circumstances. So a really, really attractive structure. So in terms of leveraging it, I'd highlight that the government has made it easier over recent years for some retirees to get more money into superannuation. They've made it easier for, I'm going to generalize and say, younger retirees, so those that are less than 75, to get money into superannuation than it's been in prior years. So that's good. Certainly some more flexibility for older retirees, but limited in that, you know, you've got these downsizer provisions where if you sell an eligible property, you can get money into superannuation. But for me, the availability of superannuation as a tax structure to hold my investments, to fund really tax effective investments, means less drag on my retirement savings, giving, you know, your listeners more income that they can spend in retirement. So a really attractive, you know, structure for delivering that sort of outcome.
Thanks, Andrew. In regards to the process, what tips do you have for retirees just to make the actual process part more seamless?
Yeah, absolutely. You know, dotting the I's is an important element of tax planning in the lead up to the end of the financial year. You know, make sure that you've got, you know, all information together in a central place. Spend a little bit of time in relation to that. You know, TFN, get awareness of where incomes come in. Have a look at what's been pre-filled into the ATO and so forth. Be aware of any deductions that you might be entitled to and want to claim. You know, it makes absolute sense to be able to, you know, for those eligible deductions, to make sure that we're claiming them. And in order to claim tax deductions, you're generally required to have proof of the expenditure in those sorts of circumstances. You know, record keeping is the unflattering element of tax planning, the unexciting bit of it, but a really important one. So making sure that we're doing all of that. In terms of deadlines are critical in terms of that. You know, remember that if you're not using a tax agent, generally 31 October will be our deadline for lodging our income tax return. And if you're using a tax agent, you'll have a later deadline in most circumstances. So that can provide a little more flexibility with that in mind. And the final thing I'd highlight is that some clients won't be required to lodge a tax return because of the level of income that they've got, but they'll have things like some franking credits off shares that they've held through the year. And there's some relatively simple forms that are available via the ATO website that can help Australians get back the franking credits or the tax that's been paid by the companies that they're investing in on their behalf. And so, yeah, I'd make sure that you're aware of that simple way of getting access to those entitlements that you have.
Andrew from Challenger, thank you so much for your time today. It's been awesome to have your expertise and to shine a light on what retirees can do at tax time to make things better for themselves. Thank you so much.
Pleasure, Wendy. Thank you.